think we are live.
We are live. Welcome to Stock Talk episode 37. Bunch of stock nerds talking about stocks, market news, all of that. We got Daniel Pronk from Calgary, Canada, and myself, Jake, living in New York. Back from Croatia, so getting a lot of questions about that, but going to keep it to stocks until the end of the stream. Might take some personal questions about Croatia after. Daniel, it's great to see you again. Super great to be back. Sorry I was not with you last week.
Oh, it's okay. Still a great stream. So yeah, welcome everyone to Stock Talk. So Jake, I don't know if you saw this yet. I'm gonna just hop right into some news here, okay?
Let's do it. Does it have to do with the Airbnb Twitter post or what?
No.
Okay.
Tattooed Chef just filed for Chapter 11 bankruptcy, like literally an hour ago.
Can I double down on this news? I listened to episode 36 on Spotify, and I heard you say that you actually owned Tattoo Chef at one point in time in the past, because that was news to me. I know that this is very old, but
that was a very long time ago, like peak 2021 vibes, and I owned it for probably 2 weeks, and I actually got out with a small profit, I believe, and yeah, definitely in hindsight, not a good move, and glad I got out.
I think that if you had stock unlock, it would have helped you avoid that bad stock.
Yeah, I mean, it would have been more objective for sure, but yeah, I mean, they're filing for Chapter 11 bankruptcy. It's official. Like, it happened.
That's insane. Also, seeing some hellos in the chat: Frank, Staccato, Sophie, Router, Dan, Dan. Great to see you all. Yeah, Daniel, anything else to share here on the bankruptcy? So when a company files bankruptcy, is it just a, hey, we're bankrupt, or do they give any type of messaging to the shareholders as to what was happening there? Because I think Stock Unlock Insights were highlighting this. It had very low cash runway, very poor balance sheet. You've obviously walked through the stock a lot on these channels before.
Yeah, so for those of you who don't know, this was a stock that I think it was like late. No, it was probably like Q2 2022. But like honestly, using Stock Unlock, I was like taking a look at its insights, and I'll show everyone here. And I was like, this stock looks like it's going to go under. Like, it looks like it's going to be bankrupt within the next year. And you can see it's down 36% in after hours now. Insight score is 1.9. You can see how many very bads there are here. So, you know, not a very healthy business, it looks like. And even our quick blurb says Tattooed Chef has negative free cash flow of negative $86.8 million, which means it's losing money. Also, it has a cash runway of half a month. The cash runway is the amount of time the business has at its current burn rate before it will need to take on debt or dilute shareholders to raise more money. So it basically just ran out of cash. It was losing money, doesn't generate any money. Its cash balance went to basically zero. And yeah, you can see like even its gross margin is negative 6%. So it wasn't even close to generating any money. And yeah, it happened. They finally ran out of cash. They couldn't find any more money. So they officially declared bankruptcy. And now they're down 36% after hours.
Were they a SPAC?
They were a SPAC, yep.
Okay, I saw like the straight line. Wow. Well, you know, heart definitely goes out to any investors that lost money there. You know, we're always very clear that we never cheer for that, while we do like to highlight bad stocks, and not naming names. But I heard of Tattooed Chef through different YouTubers. It seemed like there were a few people that were really in on it last year. Wow. I mean, that is a lot of investor money just completely, absolutely vaporized. When did that news break?
About an hour ago. Yeah, I mean, it
Beyond Meat next.
Beyond Meat's going to take some more time.
Yeah.
But that company is like same metrics, you know, negative gross margin, losing, I think they're losing well over $100 million a year. Their cash is running out. They've had a better time raising money because I think their brand is a lot more known. Like, restaurants up in Canada use Beyond Meat. And so I think that they have an easier time raising money. But, you know, I don't think that any company can raise money forever. Eventually, it's got to produce some profits, or it could have the same fate. But yeah, I think Beyond Meat will take a longer time for it to potentially go bankrupt.
I don't have the fine print on this. I do believe Beyond Meat has some partnership or a maybe partnership with McDonald's too. So
Yeah, they have a lot of partnerships, but the fact is their gross margin is still negative. Like they're not even close to making any money at all. And the point of a business is to make money. So how long can they continue funding it on debt and outside investment? I have no idea.
yeah,
It won't
this seems
last
like
forever at this rate. It will not last forever.
yeah, it would be interesting for us to put together a watch list potentially too of stocks that seem like they're about to go under. You can probably find them with the stock unlock screener, but one of the narratives that's playing through the stock market and the economy at large is obviously we were in a very low interest rate environment.
Yep.
Money was very easy to come by. You had tons of unprofitable companies either SPACing, going public, getting and raising more money from public markets. Obviously, a lot has changed. We're not here to completely re-explain the entire macro situation, but for anyone that's been following, obviously rates have went up, money is getting more expensive, and I'm surprised that some of this has not happened sooner. I know there's like a lot of a hand and bell ring going on, but I continue to see this happening to companies. And I think it's a message for all investors, anyone watching this. If you are owning and buying individual stocks, please be aware of these situations. Stock Unlock, for example, makes it super easy to look at their balance sheet. And Daniel, you actually called this one from a mile away. You have been saying this company is going bankrupt, specifically Tattooed Chef, or likely is for a while now. Kind of sad to see that you are correct, but the truth is in the numbers at the end of the day. As you said, it's pretty simple. If you can't raise cash and you don't have cash, you don't have a business. And if your business burns money and you can't get money, you're dead.
It's the way of the world. So we'll look for the next one, I guess.
Yeah. And typically we are live on Saturday mornings. Really appreciate it. Seems like there's almost 50 of us here hanging out. Let us know where you're streaming from. Drop some questions in the chat. Last week seemed to go very well, focusing a lot on questions and interacting with the stream. At the end of the day, while Daniel and I do enjoy this, we are here for you. So we always appreciate feedback on the show, how we're doing, topics you want to hear more or less about. And we have our eyes on the chat. There's one question here about Google. Daniel, I'm not sure if you wanted to sift through and pick one. Also, really appreciate all the hellos. It's great to see you
all. Okay, yeah, let's do the Google one. Would love to get thoughts on Google once you consider stock-based compensation. I think the PE excluding stock-based compensation is over 30. Yes, you are actually very correct. Let's go and take a look at this.
And just a disclaimer, Daniel and I are both shareholders in Google. None of this is financial advice.
Everyone, Jake's back. Welcome to the disclaimers again.
Hey, I listened to episode 36 when I wasn't there, and you gave the not financial advice disclaimer and shouted me out. So thank you. If anyone's playing the drinking game with that, now is a good time to take a sip.
Yeah, I was just trying to make you proud. But Google is currently trading for a price to free cash flow when you take out stock-based compensation of 36.3, which I do agree is, pretty expensive. In like a bubble. Let's not take a look at, that's probably not the right words. Let's say in a vacuum, just Google right now, not taking a look at its history or anything. Like that is a pretty high price ratio for a business that's not currently really growing that quickly. It's average historically over the past, let's try and do the past decade. So over the past decade, its average has been 43. So it is trading below its average, but again, like I do still think this is it's on the higher end of a price ratio that I would be happy with personally. What do you think, Jake?
What I always like to look at in terms of metrics when you see a very high average ratio like that is actually to look at the yield on cost over time. So what I see from looking at that and just knowing the history of Google, while it has traded at a higher ratio, they do grow into that. I tend to take a more lenient view on stock-based compensation than other people do and apply it business to business. I think Google has some of the best, brightest engineers, AI researchers in the world working for them. It's a very big business. So I do think that you need to, put some chips on the table when you're Google management in terms of using stock-based compensation as an employee retention tool, aligning incentives for people wanting to stay there. But yeah, I personally was buying the stock and building a position when it was trading at around $90 a share. Would I be buying today as a personal decision? Probably not. I'm just watching it, but I still think it's a great business. One conversation we could have here, which is a bigger one, is just how well positioned is Google for the next 5 or 10 years? as we're seeing everything move with AI tooling, search, ads, things like that, while everything is stirring around based on the amount of data Google has, their compute power, and just the amount of engineering power at that company, it's hard for me not seeing them stay near the top of the pack. I think that we already saw that with Bard coming out as their response to ChatGPT. And let's not forget, they own Google Docs, Gmail, all these other tools where most consumers are going to start to get a lot of benefit from AI by having it integrated in their existing email products, in Docs, things like that. So I am, as I usually do, a very strong hold on this. I think it's a great business. They have a lot of different revenue drivers going there. So yeah, not a super attractive price, but great businesses usually don't come cheap. So if you want to be patient here and maybe wait for a dip, you can try that. But statistically speaking,
what's interesting about Google is it hasn't participated really in the whole AI rally. Like it is up, I think, like 30 to 40% year to date. So it is up year to date, but it's not up, Microsoft levels or NVIDIA levels or Adobe levels. So it seems like Google, for some reason, hasn't participated in this whole AI rally, which is very interesting.
I think the reason why that is Bing is gaining some traction in the search space, and investors really love certainty. And I think there is a ton of ambiguity around what will happen to search and what that means for Google's ad business. I don't think anyone's disagreeing that no one thinks it's completely going away, but most of Google's revenue historically has come from their ad business. And I do kind of agree with the narrative that it's not a clear-cut story that is going to continue to be their growth driver in the future.
Yep, I would agree that's not clear.
Yeah, I heard someone make a prediction on. I was listening to a Lex Friedman podcast. He was interviewing the person who's the CEO of a Tiny Corp, which is actually this is just some 33-year-old math computer genius basically. But he made a claim on the Lex Friedman podcast. What does this person know? But just a fun narrative here that they think that there's a real chance that Bing is going to be a bigger search engine than Google in the next 5 years, based on the pace of innovation and AI integration that Microsoft has been doing with Bing. I think it's really going noticed in the industry that Microsoft is not going to miss this wave. They did miss the mobile wave. That is the common narrative. Obviously, all the big tech companies joined the web. A couple of them went on mobile. Microsoft got left behind there. So it seems like they are really not letting that happen this time. And as every day goes on, I own both companies, but I am continuously more impressed by Microsoft's feature drops, especially in the search space. I know Google is moving, but I actually expected a little bit more from them. So I'm never going to throw them out. Who knows what they can launch in the future. But as someone who's looking to build positions in companies, Google's not giving me a reason to want to build my position bigger.
Yep, fair enough.
What about you? You're holding.
Yep, I still have my Google shares. It's I agree with you. It's not something I'm buying at this price. I liked it 30% ago. I'm definitely am buying other things instead of Google right now. And yeah, I do think it is on the more expensive end right now. I don't think it's as expensive as a company like Microsoft or Apple right now, but I can't believe Apple just hit a brand new high.
Dude, they hit they hit a $3 trillion market cap. Also, Microsoft's trading ratios relative to their free cash flow are astronomical. I'm someone that never sells. Microsoft isn't a business to try to time for me, but those thoughts do start creeping in my head as I see that ratio go higher and higher and higher. I'm like, they are pricing in years of growth. And then the next question is, well, is it warranted? Are they really going to compound their growth that much? And it's hard, man. I really don't know.
Yeah, they're at a 43.4 price to free cash flow today. And if you include stock-based compensation into that, they're at a 52 price to free cash flow today. That is, to me, that is insane. I think that is just honestly starting to get into bubble territory with some certain stocks out there. I was actually researching this morning a little bit about the 2000 tech bubble, and I was looking at Microsoft's price ratio during the tech bubble, and I believe it was somewhere around 40 to 50. And then it produced no returns for 13 years. And it's those are the price ratios we're getting back to right now. That's the exact same price ratios as the tech bubble. So I that's why I keep saying, like, I am not optimistic on these mega caps over like the next 5 years. They just keep going up though, but I don't know when that's going to stop. I don't know if it's going to stop. I could be totally wrong, but I just don't see price ratios expanding forever like this. It's got to stop at some point.
Well, analysts apparently don't think it's going to stop. Archdog here with a comment, keeping us within FANG. Analysts are out of control. Apple hit 3 trillion, and right away, analysts come out with a 250 price target.
It's insane. Like when stocks are going down, analysts are like, "Oh, we're all going to lower our price targets now." And then when stocks start turning, they're like, "Okay, well now we're going to start raising our price targets." Like you see this every single cycle. Like as soon as stocks start going down again, just watch. Price targets are going to go lower.
Yeah, I might get some hate from this. I'm not sure if there's going to be agreement or disagreement in the chat, but I hate analysts. I don't think they're helpful. There's probably some analysts out there that are really good investors and great people that are actually probably good, but just like looking at the umbrella of analysts, what they say about stocks and how they're always updating their buy and sell targets, I commonly see newer investors get into binds where it's like, oh, well, this analyst said, I'm like, you can get any narrative you want looking at any analyst, buy side, sell side, to see what they're looking at.
Well, it's
really what's just driven me to want to build Stock Unlock with you and get more self-serve with this stuff. Cause I'm like, I personally believe that what do they know that we don't? And maybe that's naive. But.
Well, Warren Buffett has historically said he has never made an investment based on an analyst report, and he doesn't read analyst reports unless the funny papers are out, basically. So he doesn't read analyst reports. He pays no attention to them at all.
I have to take this comment from Nathan just because Nathan is unaware of the button that they are pressing right now on the founding team. He said, I would prefer taking out the analyst tab from the insights on Stock Unlock. I actually tried to fight, like not a lot, but like I didn't even want an analyst tab. I was like, I don't want to show analyst data inside Stock Unlock. I also will say I don't think that's right. I want to be self-aware that everyone has different investing styles, and who am I to like dictate what people want to use or not use. Thankfully, we have a well-balanced team, and Daniel understands other people's perspectives, dare I say, better than me, to no one else's surprise. And we have an analyst tab. Daniel, maybe you want to speak a little bit about how investors may want to use or not use the insight score that we have on analysts, because that is something we rank in our insight scores on Stock Unlock.
Yeah, I mean, the way we justified it was like, you can take a look at someone's opinion. Like you can take a look at the analyst opinion if you want to get what the overall opinion is of the market. But we don't believe that you should ever buy or sell stocks based solely on what an analyst says. And we have a lot of people ask us like, well, what does the future of this stock look like? And the reality is no one knows what the future of any stock looks like, or its fundamental growth, revenue growth, anything. Everyone's just guessing. Even the analysts, they are not fortune tellers. They are all just guessing as well. But in terms of data that you can get, that's the data. You're going to get every platform you go to. It's going to be analyst data on what they are expecting for revenue, EBITDA, EPS, cash flow growth. And then DCFs are really built on those models on what analysts are thinking. So really, if you want a complete platform in the investing space, you got to have analyst data.
Yeah, and we have Apple up here. You know, it seems like analysts project Apple to continue to grow. Let's see, there are 4 analysts out to 2027 because, of course, they have crystal balls and know how to predict this stuff. I don't even know why this is an industry. 558 billion in revenue. Who knows? Who knows how they're deriving those numbers? Maybe they're right, maybe they're not. And just to be fair to all investors, if you are looking for analyst data, even though it's not our favorite, I do still think we present it better than most other places on the internet. So if you're looking for recommendation trends, latest buy-sell ratings from different organizations, even different views on how to visualize percent growth based on what analysts are saying, we do have this information here. And it is one of the insight score categories. So up to you as an investor if this is something you want to take into account. For me, I do not. But it is a good signal, Daniel. I will look at analyst price targets just to see if I'm near them or not. Not that it means much, but I will take a second look at something if I find that most people are disagreeing with me, just because it makes me question, am I missing something obvious? Is there something everyone is seeing that I'm not? I at least want to like understand where they're coming from to at least take like those opinions into account.
Yeah, I actually don't look at analyst data at all anymore. I don't look at price targets. I don't look at anything.
Dude, Daniel Pronk analyst right here.
I historically I did, and what I noticed was when I would on every single stock I would take a look at almost 100% of the time. If I would take a look at 100 stocks, there might be 2 or 3. So 97 to 98% of the time, analysts would have price targets on the stock that were significantly higher than where the stock was trading. How is every stock going to go up all the time significantly?
That's what stocks do. What are you talking about?
And then if you just like one thing, if you're going to take a look at analyst price target data, just take note of what they are and then put that in a book somewhere, write it down, look back on it in a year and see what happens. There's a small chance they're going to be right.
But if they're not right, they'll just revise the price target.
Exactly. They'll just raise it or lower it. So it's like, yeah, I could get fired up on this topic. I could get really fired up.
Also, I know it is a lovely Friday, Daniel. I do know that you have dinner plans, which is great. So just a heads up for everyone. We're about 22 minutes in. I think we're going to go about 45 or 50 here. So
yep,
a little bit shorter than normal. From Doggy Style, we're going to assume that name is actually about playing with dogs. Jakey got a haircut. Jeez, I don't know what you are talking about, Doggy Style. Also, let it be known, there's a reason why I'm not getting my haircut. We were in a meeting about 2 years ago, and we were all talking about Stock Unlock, the future of it, starting to build the business before investors got involved, before we had users, before we launched it. I'm a very bullish person, and I said, I will not get a haircut until we reach 4,269 paying subscribers. It is a random number. I don't know where it came from. And we're making our way there. We are closer to that number than 0. And if you want to support me getting a haircut, please share Stock Unlock with your friends and network. So now you all know. I know some of you guys come here every week. Normally my hair's been short my entire human existence.
All right, Stock Auto is here. Thank you for tuning in, Stock Auto. He says Microsoft is the most efficient tech player. That deserves some premium. The earnings will grow faster because of margin expansion. So even if there is a PE rating, which means the PE will come down in the future, you can still make decent returns. What do you think, Jake?
I am shouting out Stock Unlock in the chat and didn't listen to you.
Got it. Thank you for
that. I was typing. Yeah. Let me read it. Microsoft.
I guess I'll give my opinion first then.
So, I read it.
Cool.
Do you want to go first?
Yes. So I agree. I think there's almost no question that Microsoft is probably the best tech company in the world. That was a weird way to word that, but I hope that made sense. What was I going to say? I also think that there's almost a guaranteed future growth for Microsoft. However, historically, when you look at stocks that get to these price ratios, even though there is guaranteed future growth, they still typically see low returns going forward on their stock prices because they are so astronomically high. So like typically when you're buying a stock at a 50 price to free cash flow now, that business has to grow its free cash flow probably above 25 to 30% annually for like 5 years to justify that price. So the higher the price ratio goes, the more future you're paying for, and the less your returns are actually going to be. It's just the way the math works. So for Microsoft to deliver a 10% return from its current price today over the next like 5 years, I mean, that business is going to have to do miracles. And as a value investor, I don't even like calling myself really a value investor, but just like for myself, I'm going to remove that. Not as a value investor, just as me personally. I feel like it's the risk reward at this price over the next 5 years is just not attractive.
I'm going to label you, Daniel. I think that you are a value swinger. You are like a value, you're like a long-term value investor, and like a true swing trader had like a baby. And it's worked
Dude,
out
I
for you
don't
very
think
well.
I'm a swing trader though. Like, you got to read Warren Buffett's biography. That guy was buying and selling stocks. He would buy a stock when it was cheap. It would go up 40% to above fair value. He would sell it, boom, buy the next one. Like, that is value investing. You don't have to hold on to everything forever. That's nowhere in value investing does it say you got to do that.
Yeah, I think this might be more of a boring like English word conversation, like definition of words. I think swing trading has a bad connotation to it, as I think it's usually applied to day traders and people who are not doing it on value base. I guess maybe I define this wrong, but to me, day trading, obviously you're trading every day. To me, swing trading just means you're getting in and out of positions within a year. So
To me, okay, I guess we got to define swing trading then. To me, swing trading is buying a stock based on technical analysis at some support or resistance point, and then using charts to make your trades over a period of like a year, or sorry, over a period of like a week to a month. When I'm buying a stock that I believe is undervalued, I am totally willing to hold it for a year or two until the value is um is realized.
it looks like
I don't
Google is
what
agreeing
what
with
I'm trying to say is I don't buy stocks with the intention of selling them within the next couple of months. It's just like when prices change with value, so does your expected return. Like when stocks go up 40%, at that point, your return now, your future expected return is significantly lower than when you initially bought it. And as an investor, I just cannot ignore that. So I'm like, if by holding on to this stock, I am making a bet that the returns from this point are going to be high. And in not all stocks, I don't think that's the case. So I trim them down or I sell them.
Anyways, we are not a Oxford Dictionary podcast,
Okay.
but it does look like swing trading is more about the duration. I'd say, let me know if this is fair.
Okay.
I have a lot of respect for your investing style because, like you said in that, you're like, I don't buy with a plan to sell. I would
Yep.
slightly reword that as saying, like, you buy it because you like the value of the business. You have no clue if you're going to sell it tomorrow if it gets short squeezed, or if you're going to hold it for 3 or 4 years to see that thesis out. But like,
Yep.
you have a very mathematical driven value based approach. I think that's amazing. It's worked super well for you. And I want to hear your opinion on this. The one,
Okay.
the one thing that great investors do, that great investors such as Peter Lynch have fallen victim to in the past, and Warren Buffett, is selling great businesses too early, no matter what the ratio was. So I think one of the perfect examples is selling Home Depot too early for Peter Lynch. Someone can fact check me there. I might be mixing up names, but point being, when you have a great business that's going to grow and compound, it is, you can in theory have a 10 bagger if you hold on to that even through the rises and falls. So for me, this is a perfect example with Microsoft. It is priced very high right now.
Yep.
I also agree that like it might come down, right? But that to me doesn't change my thesis that like I'd rather hold that through, because you can end up being that person where it's like, I did own that stock, but if I just held it, then it would have been a 10 bagger. And maybe that's good, maybe it's not. But that is the potential
Yeah.
downside I see of getting in and out that quickly.
There's also a caveat I need to make here, which is these stocks that I'm typically buying when I believe they're undervalued and then selling when they get to fair value or what I believe is over fair value. I'm also usually buying those stocks with the sole investment thesis that it's too cheap for me to ignore. It's not because I want to hold it forever. And there are stocks in my portfolio, like Brookfield, for example, where I don't plan on selling it. Like if that stock doubled within the next month, I don't think I would sell it, because that is when I really truly do just want to hold forever. I also have a stock, Equitable Bank. That one I do truly want to hold for hopefully decades. Same with Alimentation Couche-Tard. That one, like for me to sell those stocks, their price ratios would probably have to go. I don't know, because I'm going off theoretical right now. I don't know what my emotions would be at those points, but they would probably have to like triple or quadruple. So I agree with you. You know, if you own a great business, it's probably worth it to just hold it forever, but the stocks that I usually buy and sell, it's not like that. Like, for example, a great example is the bank I bought, which I am not disclosing the name of. The small regional bank I bought it because its PE was around 4. It was still growing. I thought it was ridiculously cheap. I don't think it's a fantastic business. So if that stock gets up to fair value, if the PE goes back up to 10 and I double my money, whenever that happens, I don't know when that's going to happen, but I'm like confident that it probably will happen. And then whenever that happens, it could be a week from now, it could be a month, 2 years, I'm going to sell it. And that's the plan. That's always been the plan. So I think it's just, every investment has a different strategy, I guess, for me. And that's why you see me buying and selling stuff once in a while.
Dude, I love it. My last comment here is I don't think anyone can ever hold a hand to someone making money on a trade. So even when people are in this situation where I should have held on to it, but I only made 50%, like it's all a relative framing thing, right? Like I don't think that you can say objectively, hey, you made 50% on that sell. Like that was bad. Sure, you can look at the opportunity cost, but yeah, you're getting a lot of agreement here in the chat. Daniel is a value investor. Daniel is an opportunist value investor. I am going to call you a value swinger just because I think it annoyed you a little bit, and I'm your kindergarten friend on the playground, just trying to give you a poke. But
it does annoy me, but technically, based on what we saw on Google, yes, sometimes I technically swing trade unintentionally.
it's not a bad thing. Anyways, this is enchanting to me. I mean, everyone has a different investing style, and I'm going to keep thinking of the label for that one. But
got it. Okay.
Yeah, back to the chat. Yeah, thank you for. Wow, there's a lot of comments here.
Yeah, so we got a comment here from Art Dog. This is kind of my thinking. I agree with Daniel. Thank you. If you buy a stock low and it hits your price target way faster than you expected, then in my opinion, I would sell it and move that money onto another stock. I actually agree. Well, I obviously agree because it's what we're talking about. But a good example of this actually is TELUS. Let me present my screen because I owned TELUS. I bought it, I think, for the first time. I love how we don't plan these conversations and they just happen and it's just like a good time. Anyways.
It's like we really like investing or something.
Like super nerdy. I absolutely love investing. I really do. Okay, so TELUS, I bought it somewhere in here. I believe it was like October 2020 when it was trading for around $20 Canadian. And on my channel, I was like, this is a stock that I want to buy and hold forever because I understand the business. I'm a customer of the business, and I believe that they are like the best telecommunications company in Canada. So my intention initially was like, I'm going to buy this stock and I have no intention of selling it. However, the business was growing, I believe, at like 5 to 7% per year. And it was supposed to be like a slow growing dividend paying business. Then it ran something like 50%.
In a short period of time.
In a short period of time. It was about 18 months. When I saw a slow growing business run about 50% within this time frame, I was like, yeah, this is getting pretty freaking expensive. Like even the dividend yield was getting quite low. So for a dividend investment, I was like, my yield on the shares holding them today isn't even really that high, especially relative to its history. And I actually almost top ticked this. I believe I sold the stock around $34 a share, which was like right here. Dude. And I announced that on my channel because the value of the stock got way too extended, in my opinion. It was selling for like record high price ratios, if not above them. And like the yields going forward, I thought were just very low at that point. Like all of my expected return over like the next 5-6 years was realized in 18 months. So I sold the stock. And then a lot of people gave me some backlash for that. But, it's just what I felt was right to do in my portfolio. And I mean, the stock now is down 24% from that point. So if I held on to it over the past 13 months now, I would have been down 24% on that sell. Instead, I took that money and I invested it elsewhere, and it's compounding. It's continuing to compound for me. So I guess you could just say that I adapt to the situation. I go in with a plan, but then if things change quickly, then I do my best to just adapt to what the price is doing.
And you time the top.
I didn't mean to, though.
That's one of those where like you look at it after and you're like, okay, don't let this go to my head. don't let it give me a big ego. To make you sound more human, I think that you did the same thing with Meta, correct?
Yeah,
Where
and I did not time
on
the top.
what's up?
With Meta, I did not time the top. It's continuing to run.
I thought you said I don't want to talk. Like this is like a no topic for us.
Yeah.
Yeah. So when you sell, you never know. But I
Mhm.
think like one good takeaway I have, not that it's a surprise for me. I know you very well, but like people who are trying to potentially like see what we do in the markets and see how you can apply it to your own investing. When you go in with a plan,
Yep.
it makes it very clear cut what to do, and it removes a lot of the emotions out of the investing. So one thing I really like about what you're sharing is it's like, yes, you have emotions, like you're not a robot, or at least I don't think you are. But these decisions are easy for you to make because you go in with the plan, you stick to the plan, you don't question it, and you execute it like a boss, and then you take away the bag, and then you reinvest it back to the next plan. Hats off to you, sir. I mean,
Thank you.
good,
And
good trade.
it doesn't work all the time. I mean, I just made a video on my channel talking about TrueLeave, which was a massive failure. So let's calm down a bit. I definitely fail. Okay. Definitely have failed in the market too. I will say I'm on a bit of a hot streak though, which I'm pretty proud about. But
The
I
market's
have
on
had
a hot streak. I'd
the market in
say
general is on a hot streak. I agree. Yeah. So is
this
it
is
me or is it the market? I don't know.
so I am obviously biased. We're both co-founders of Stock Unlock. I think that if you looked and marked, this would be hard to track, but the success of your trades and like where the development was of Stock Unlock, that there's a very strong correlation of Stock Unlock software making it harder for you to make bad decisions. For example, we started this off talking about the tattooed chef for a little bit.
Yep.
TrueLeave obviously was a mistake. Also, I have probably made more mistakes than you, so it's like definitely in that boat. I'm sure everyone else in the chat is as well, but it would be cool to see that. I mean, we need better marketing material. We have, lots of people
Yep.
using it, but definitely trying to get more.
Harold says the only time I time the top is when I'm buying.
That would be a good t-shirt.
That would be an incredible t-shirt. That's a great quote right there. Thank you.
All right. If anyone wants us to analyze a stock, drop it in the chat. Daniel, it seems like we have a couple up here. I'm not sure if any of these are catching your eye. Someone asked about Bark before, which I actually think is a company called BarkBox, which I looked at like a year and a half ago, I believe. Okay, I feel good about this. My friend was going to buy BarkBox like a year ago, or maybe like when I think they went public recently. Yeah, in 2020. And I just looked at their financials and I looked at their S1 and I told my friend, I'm not a financial advisor, but I do not think that you should touch the stock. Like it is a cute company, but I don't see what moat they have, like especially with Chewy. And it seems like the stock has done nothing but tank. But dude, they have the ticker Bark. Like that pisses me off. Like, how do you get the ticker Bark, which is badass, and then you don't show up for it? Pathetic.
I don't know. I'm going to show everyone what I'm looking at because I just took a look at Bark. That is like literally straight down 90%. What is going on with this business? While we're here, why not just take a quick look? So revenue's been actually downtrending the past 2 quarters. Operating cash flow in the trailing 12 months has gone positive, actually. Oh, they're getting their operating cash flow up. It looks like they're trying. It looks like they are trying. They're not quite there yet, but they are trying. Their free cash flow is still negative.
They have a 4.4 insight score specifically for their financial health, which is interesting. I'm seeing 128 months of runway based on their current spending. So,
hey, Jake, check this out.
What's up, man?
So you see how, their cash from operating activities was losing hundreds of millions of dollars, and now they've produced about 4.7 million in the trailing 12 months.
Is that from stock-based compensation?
No, their stock-based compensation is basically $15 million just in the last quarter, or sorry, $15 million in the trailing 12 months. It was up to like 20 million. So this is what I do not like to see. I do not like to see businesses where they're losing tens of millions of dollars and the insiders at the same time are getting rich, making $20 million a year, while your stock is also down 90%. This is the type of stuff I I just do not like to see from a management team.
I'm looking at their insider stuff right now. To back up what you're saying, it is a wall of sells, but curiously,
there's a
this month
buy.
on the 5th, the CFO bought 107,000 worth of shares at a $1.08, but then the CTO sold. It looked like a very small amount. Some
Yeah.
shares at $1.38, but yeah,
Oh, there
nothing too
actually has been
crazy
some
here.
buying.
A little bit of buying, yeah.
There is a
So
little bit of buying going on, which is interesting. But overall, when I see, this is relative to the amount of cash the business actually generates, this is a large amount of stock-based compensation. So I don't like to see that.
oh wow. If you scroll all the way down, what I'm looking at now is their executive board. According to our data, the chief technology officer is being paid $2.79 million a year. And they have a general counsel secretary who's being paid $1.2 million a year.
Must be nice.
Must be nice. Yeah. Operating a company that's absolutely destroying shareholder value, building a business with little to no moat, and rewarding themselves greatly. You could not
Yeah.
pay me to own this stock.
Yeah. Okay. Well, let's. I'm going to answer some rapid fire questions here. I think I got a few. CPX looks like it is at a good swing level. So I don't buy stocks based on their stock price or where I think their stock price is going to be, but I have noticed that utilities in general, and sorry, I just got a little bit off track there. I have noticed that utilities have not been participating in the rally. So what I've kind of noticed just in my own investing in my own portfolio is when the overall market is going up and we're seeing tech stocks, for example, tech stocks going up quite significantly, it seems like investors pull money out of utilities because utilities are seen as like safe stocks. So it seems like people are selling safe stocks and moving money into risk stocks or more expensive, faster growing stocks. So there's kind of like this inverse relationship, at least in the short term, between these sectors. It's kind of what I've noticed. But Capital Power, full disclosure, I do own this stock, and I think they're going to be just fine. I got asked today in the Discord as well, like, why is the stock going down recently? And I don't know. I have no idea why it's down over the past month, but the fundamentals of this business, I think, are still pretty incredible. So I'm going to hold on to it.
I will continue to not invest in utility companies.
Fair enough.
More for you.
More for me. That's right.
Yeah, we did. We're not going to rehash it. I think 2 or 3 episodes ago, we did have a pretty interesting conversation about the future of energy and how that could affect stock prices. I believe that was episode number 34. But not going to rehash that.
Yep. All right, let's do ERII because I have not seen this ticker before.
And while you're looking that up, a little bit of brief comic relief from Ryan Headley. Great to see you again. You can tell people that you own Bark and BAM. Dude, just make a stock portfolio with only stock tickers that start with the letter B. Like, that sounds like a great investment strategy.
Tickers with B perform better.
BN, BAM, Bark.
Let's do it.
Oh, Baba.
Baba.
Dude, what a mix. Wow, well, what are we looking at here? I mean, this stock has been
okay,
running.
this company is Energy Recovery Inc. Engages in the design manufacturing of industrial fluid flow solutions.
What? Fluid
its segments
flow?
include water and emerging technologies. So are they a water development, sales, and support? They sound kind of like a water utility company. Maybe. The stock has done very well. I guess we should take a look at that first. Let's take a look. So let's take a look over the past decade. It's up around 770%, and it's actually at an all-time high right now, basically.
What's the market cap?
Market cap is 1.6 billion. Revenues look like they are actually not at an all-time high. So what is the cash flow? Interesting. Cash flow is 22 million.
Yeah, these are some of those businesses where I wonder if some news has come out about this stock that we're not aware of, like a very big contract or a technological innovation? Because I mean, obviously something's driving that stock price gain.
Yeah.
You know what? Here's my prediction. They dropped the word AI on their earnings call probably like 20 times.
Yeah, I mean, I think you get like another billion in market cap for every time you say AI right now.
Yeah. We'll see
Okay.
what the next buzzword is.
Price to operating cash flow is 68. So I don't think that this is a very cheap business right now. It looks like it's always kind of been expensive, though. Would EBITDA be a better metric for the stock? Even EBITDA has kind of been, yeah, price probably follows EBITDA better on this stock. And even then, it's pretty high. I could be wrong here. I don't know. It looks like it's quite expensive to me, and I'm not totally certain what that stock does. It does have a decent insight score of 3.5. I did notice that it has some pretty high stock-based compensation, though. If you if you look at our management segment here, stock-based compensation makes up 30% of operating cash flow, 34% of free cash flow. So to me, I don't like that. I think that's kind of a red flag, and it's really not growing. Like its revenue is going down, profits are going down. I guess operating cash flow and free cash flow went up, but all other profits went down, and it's trading for like a 60 price ratio. So I don't get it. I don't know. I don't get it. There's
Someone in the chat just came in. Eduardo says the stock develops equipment to treat seawater to consumption.
it's like
Yeah, I feel like there's
desalination.
just a piece of the story we're not missing here. Like that stock action is huge, and I would at least like to think that there is some news that came out about them or something within the macro space of desalinization. I think is one of the technical terms here. So yeah,
Yeah,
I just feel like we're missing something.
this is a stock right here that I used to own in 2020 and in 2021. I no longer own this stock, but this is another desalination company, a
So
smaller cap as well.
which stock is this?
HEO.TO, H2O Innovation. And they're like wastewater treatment, desalination, basically water services. And it looks like they're running quite hard as well at a 1-year high. Year to date, they're up probably 30%. Not bad. From their low here, they're up 75%. So this stock is also running. So I do wonder if there's some news in the water treatment sector or desalination sector right now.
Wow. Well, we probably have time for one or two more. I think we are starting to brush up on your family dinner plans, which I hope are amazing. Maybe we have time for one more. Also, let me know in the chat. I know we have a lot of people from the Discord here. I do have the story to share about the 41-hour travel experience from hell. If anyone wants to hear about that. So let me know in the chat. I think Daniel's going to bop off probably in about 5 minutes. And I'm happy to hang on and share that experience, but it would be very off brand for what we normally talk about here. So let me know in the chat if anyone wants to hang out for that.
Yeah, sounds good. We got a question here from Wouter. When does a stock follow EBITDA? I think you talked about this before, but I forgot and can't find it back. So EBITDA is not one of my preferred metrics. I prefer to use operating cash flow. If operating cash flow doesn't work, then I revert to EBITDA, but again, I don't love it. And then typically the stocks that I find that do follow EBITDA are utilities. So that's kind of why I used it, because I was like, if this is a water utility, maybe it will follow EBITDA better than operating cash flow. Because once in a while they do. Strangely enough, they do.
I think that we also within Stock and Lock, Daniel, if we brought up an insights page, do have preferred key metrics. So diving into this question more, whether you're looking at real estate investment trust, often known as REITs, banks, utility companies, just tech stock, it's a little bit of different across the board, and sometimes it does group by industry. So in Stock and Lock, we do have some of the key metrics grouped to the industry. It's a little bit hidden, but it's at the bottom of the insights page.
Yep. Okay. I'm going to do one more. KDP. All right. Let's share my screen. And then I should get out of here so I'm not late. Okay.
Make sure to tell everyone I say hi, too. I will actually be going to Canada for my first time ever. I'm super excited about it within the next month.
I guess we
So
should let everyone know we're kind of thinking about planning a meetup in Calgary when Jake's here. So let us know as well if you would if you're in Calgary and if you would like to do a meetup.
I'm putting you on the spot, Daniel. We need you to plan this meetup.
I
Let's
don't
do
even know if people are interested.
it. Yes, well, we'll both be in Canada, so if anyone's up there for the Stampede, could be fun to get some stock and Lockians together. Not sure what term we should use to describe ourselves, but yeah, let us know. Drop in the Discord, reach out even to email. Let us know if that's something you'd be interested in.
Okay, this company, KDP, is Keurig Dr Pepper. So I imagine that they are, yes, beverages. I imagine they own Keurig and Dr Pepper. That would make sense. This stock is up a lot, and it's been going up consistently, 730-ish% since 2009. Looks like their revenue continues growing, and their free cash flow continues growing. I am interested in the financials here. It looks like they did an acquisition at some point in 2018, maybe 2019. And that looks like it's kind of accelerated growth. Maybe we can see a goodwill spike on the balance sheet. Let's see. Do we see a goodwill spike? Yes. So in the third quarter of 2018, they did some sort of acquisition and it was big. It was about 16 billion in goodwill. So I would want to know what that acquisition was. Intangible assets also increased by $21 billion. It was a massive acquisition. Did their shares outstanding also explode? Yes. Their shares outstanding absolutely exploded. So they took on, or they diluted massively in this acquisition. But it doesn't look like that really affected the share price. The share price just continued going up. Liabilities also spiked. So yeah, I don't know. I would look into that. Let's take a look at cash flow. In the trailing 12 months, the company's cash flow looks like it actually is coming down right now, 225 billion. So it tripled from 2017 to 2022. Strong growth. What do they do with their cash flow, though? They buy back shares, it looks like. They do pay a dividend, too. Okay, not really any red flags here. What are they trading for? 20 price to free cash flow, 4 free cash flow yield, 2% dividend yield. Okay. Let's look at their historical price ratios. And then let's take a look at what insiders are doing. So we'll look at price to operating cash flow first. So it's currently at 20. Its average is 17. So it's not like cheap relative to its history right now. It is selling above its averages. What about free cash flow? 24, average is 22. So yes, it's not really like a, I wouldn't say this is like a cheap stock right now. Let's get rid of exercises and grants. Insiders have been buying in May. Some selling, buying and selling. Nothing really to take away there. Oops. Yeah, I don't know. I mean, it looks decent. It looks like the revenue and everything has been growing very nicely over the years. And free cash flow, except for recently. I would want to know why that's dipping right now. But it also doesn't look that cheap to me. That's kind of my takeaways.
Yeah. Daniel, your family called. They said that you're late for dinner.
Oof, I am.
Thank you so much, everyone, for joining. Geez, I forgot what episode number it is. I think we're 37 right now. And yeah, had a super active chat today. Again, we always appreciate your continued support coming. I'm going to hang out for a few extra minutes. I think there are 1 or 2 people that said that they wanted to hear a little bit about the 41-hour travel experience from hell. But this officially marks the end of the episode before After Hours. Daniel, what's for dinner tonight before you go? What are you about to eat?
Burgers. We're having a barbecue.
Let's go. That sounds great. All right. Well, enjoy. Happy weekend.
All right. See everyone. Thanks for tuning in. And Jake, I guess this is going to be your first time solo streaming. Have fun.
It's just going to be a quick story share. And yes, normally we talk about stocks. Daniel, giving you that salute. Thank you, everyone, for hanging out today. Very few people know about this, but I'm going to take just a couple minutes to walk through how an airplane I was on almost seemingly crashed. Everyone actually had a panic attack. There was fire that was being spit out of one of the engines. So Gonna just dive into that a little bit. Obviously, have the whole thing narrated here. So yeah, as most of you guys know, took a trip to Croatia, which is great. I'm definitely one of those people who do not take breaks ever. Daniel says I work too much. It's probably true. So thankfully, my girlfriend loves planning trips, and we went to Croatia. So not going to talk about that trip. We're here to talk about the plane ride from hell back. So we were supposed to be a one stop. So we were flying from Dubrovnik to London and then London back to New York. The trip should have taken 10 hours. It ended up taking 41 hours. It involved getting stranded in airports, having multiple plane tickets start to bounce, just everything that you could think could go wrong will type of situation. So we were in the air. We were in the air for about 25 minutes, and you hear this clanking. So it almost sounded like a very hard hit, but it was really scary. And the reason why is the flight attendants just started doing the food services, and like people started looking around at each other, and they're like, that was weird. Like it was not turbulence. You heard like a clanking or knocking like while you were actually on the plane. So it was pretty scary. The flight attendants looked scared. So that's what kind of tipped me off. The flight attendants looked absolutely terrified. So we're on this plane. A couple people in the back started saying that they literally saw fire come out of one of the engines. My girlfriend starts crying. People are incredibly distraught. They're not really telling us what's going on. So like at this point, I actually thought we were going to die. It was terrifying. Obviously we didn't. I'm here. Long story short, they did eventually start giving us information. When we heard the clanking, you literally heard the plane start like dipping out of the sky, like not like a nosedive fall, but like the plane kind of swayed a bit and everything. It was really scary. The pilot eventually came on. He said, please like don't panic. We have control of the plane. I do want to let you know that we are experiencing engine problems. We will not be making it to our final destination, and we will be making an emergency landing in Venice. So we landed way too early, landed in Venice. We were greeted by a firefighting crew and a fire truck on the tarmac. So we landed and a firefighting crew came out. We started getting more information as to what happened from the pilot. I'm forgetting the technical words that happened, but typically air flows through the engine one way. It seemed that there was a glitch that caused air to flow back through the wrong way through the engine, which messed up some of the metal, caused some of the fire. Thankfully, I didn't see fire, because if I was in one of those seats that saw fire, I might have actually had a full-blown panic attack, which has never happened to me before. So sitting on the tarmac, end up staying on the mat for a full hour and a half, 2 hours for them to get buses for us after the firefighter crew cleared the plane. So we walked off the plane from the mat. They didn't let the plane go anywhere. They like shut down the airport for us. And that is when the hell trip continued. British Airways did not operate at the Venice airport. There was absolutely no staff there to help us. And pretty much they said, we're going to have to work on getting another plane for you guys. We ended up being stuck in that airport for 16 hours. We were unable to get our bags. The authorities in Venice did not actually allow us to leave our gate area. So we weren't allowed to leave. If we left, we weren't allowed in, and none of us had visas. So they said that we couldn't move. So we got like $10 vouchers and stuff, and we're supposed to make do. They ended up keeping the airport open overnight. Of course, to add to the sad tale here, the airport was infested with mosquitoes. So while we were waiting for 16 hours with very limited information, we were getting attacked by mosquitoes. So things are getting worse and worse. Thank gosh we did not have small children. There were also people that had babies. There was a set of twins that were about 1 year old, and some elderly people citing that they need medicine. They actually had authorities go to a local CVS or something, buy boxes of water and Pampers, and kind of like throw them on us in our little waiting room area. They eventually scheduled the plane. It got delayed multiple times. It was the interesting part of the story, so the rest will get wrapped up really quick. But my girlfriend and I ended up hitting around 3 or 4 other airports. We had to Uber from one London airport to another. It just got worse and worse. We got a ticket from British Airways to go onto a United flight, went to go get on that flight. They said that we did not have a ticket. And, it was a very long, arduous experience, but it was a reminder that we do not live in the Matrix. The vacation was absolutely beautiful. If you are in Stock and Lock Discord, I did share some images there. So yeah, that's the story. I'm not here to bore you guys about it. I'm actually super shocked that there's still 60 of us out of the 75 hanging out for this. So Yeah, happy to be here. Definitely want to inspect planes a little bit more before I get on them, but will not stop flying. Let's see. Jake saw him on YouTube and stalked him about the idea of starting Stock and Lock. Yes. Yeah, if you're curious about how Stock and Lock started, check out episode number 1. So we are on episode number 37. If you go to episode number 1 of Stock Talk, we actually do spend about 15 minutes going through a very fun story, which involves me basically almost harassing Daniel online as a random person on the internet. I watched his YouTube videos and just as an engineer saw that there was a lot of opportunity to automate a lot of the spreadsheets he was doing. I was also very underwhelmed with a lot of the software available for us today, where some of it's okay. I just thought that there was a lot of improvements there. Which airline was that? That was British Airways. We are still fighting with them a little bit on receipts and trying to get some money back. I do not think that we will be flying British Airways anytime soon. It was very poor communication, very poor handling. And then, of course, you get the generic corporate email. We're so sorry. We're so sorry. Like, take this $100 voucher. And I'm just like, you have no idea how over $100 worth of voucher that should have been. Yeah, I feel bad for the kids and the babies too. What I was reminding myself the entire time was thank gosh, we did not have checked bags. Thank gosh, we did not have children there. My heart actually went out to the parents who were dealing with small kids, and it could always be worse. There was a couple on their honeymoon on that flight as well. Yeah, no, that does not make up for it. And what's frustrating is they tell you in the moment, like, oh, we're going to handle everything for you. We'll reimburse all your expenses. If you guys need some extra time, we're willing to handle stay accommodations. And what actually ended up happening after they deplaned us off of the plane that finally rescued us from Venice is none of that happened. We weren't able to do any of those things. So, yeah, nothing nice to say about British Airways, unfortunately. BA is one of the worst companies in the business. Yeah, it was pretty bad. Anyways, yeah, thank you everyone for hanging out. This is the first time I've went solo. Obviously, we're not talking about stocks here, and we really appreciate you hanging out. We wouldn't have the opportunity to do this without you. And please, leave your comments, leave a thumbs up if you're liking the video. Please give us feedback, even if it's constructive. We love to hear from you what you like to see from Stock Talk. We do a range of things. Sometimes we bring on guests. We have also talked about recent financial news. Sometimes myself or Daniel will do a full 5, 10, sometimes 15-minute stock analysis that we come prepared with to the channel. And then our favorite, of course, interacting with the comments. So let us know which one of those you like. If you'd like to see us try something else, we really do drive not only our software development with Stock Unlock, but the content we put out here through your feedback. So it's incredibly valuable to us. So I'm just catching up on these comments here. Europe has very strong passenger rights and legislation. Yes, that is true. And we are definitely leveraging those. Thankfully, my partner and beloved girlfriend is very good with traveling. Her card actually has some insurance here. So I'll be sure to give you all an update as well. Yeah, UK no longer in Europe. Yeah, it was interesting because it was a British Airways flight, but we were grounded in Venice. So it's, even though we were supposed to land in Gatwick or Heathrow, I'm forgetting which one. All right, sending you all off to have an amazing, amazing weekend. For those of you who are celebrating July 4th coming up, who live in the United States, I know we have a lot of Canadians here, but some of us are US. I hope you have a very great, safe celebration. Cheers for July 4th. And I'm going to hit that end broadcast button. Have a great, great weekend.